So let's get started. So we'll be discussing the following points basically. Let me write them down. I remember I told you to come with your um either your writing material and your pen, either a jotter or something that you can use, because some of these things that we're talking about, you need to also go back and study them, practice the charts we'll be talking about. So I pray that, or let me say, I hope we all have our writing materials with us. Structure, range, area of value, liquidity, and then entry. So before we proceed, I would like to say something brief about the main course itself. Those videos that are on the website and also on the Google Drive, because those videos are very important. That's like the first thing you need to know about forex. When you come to forex, like once you want to learn forex, that's where you should start from. You have to know some of those basic things there like that. So that those videos are very important. If you've not gone through them, just go through them. Make sure you understand those basic things. But what we're discussing now is more of like the it's a little bit, I won't say it's advanced, because even as a beginner, you can learn it and master it. And that's basically what I used to trade. So it's something that if you learn from now, you understand it. There's some of those basic simple things you can get them from the course. I've spoken a lot about it there already. So for this new set of training that we're starting, this training I was my personal target for it is today is 12th. So yeah, today is 12th July. So my personal target for it is, let me say, 1 month. Within the next 1 month, you should be able to cover up almost everything here. And I want to believe that after that 1 month, you should be able to apply it very well to your trades. So what I want you to do is just give more time to practicing. Anytime we're done with the session, just go back to the chat, practice, always ask questions on the Telegram group or WhatsApp. Just make sure you're always looking at the chat to help you get better. Like I used to always say, is you get better by practicing, you get better by trading. It's not just by reading or watching the videos, you get better by actually practicing. That's trying to take trades. So the first thing we'll be talking about structure, then we'll talk about market range, then we'll talk about area of value, then we'll also talk about liquidity and then entry, how you take entries on your trades. So for this night, we're going to start with the first one, which is structure. So we're going to start with structure. Remember, I used to always tell you something, or from the course I've told you, the forex market is basically, it moves basically in two directions, only two directions. It is either the market is buying, that's when it's buying, the prices keep going up. The market forms what we call an uptrend. There's an increase in price of a certain commodity or crypto or any coin or any currency you are trading. It's either the market is buying. When it's buying, we want to see uptrends like that. It is called a bullish market. This kind of market is called a bullish market. This is called a bullish market. And it is called bullish. Why? Because it is buying. Now, in forex, there are sometimes any profession you go to, there are terminologies that they use. There are key terminologies they use in their profession. So in forex, anytime you hear them say something like bullish, just know they are referring to an uptrend or a bullish market. That's a market that is bullish, which simply means a market that is buying. That means there are more buyers in that market. That's a bullish market. So that's the first direction the market goes, bullish. And if you are talking about a bullish market, what are you expected to do as a trader? It's simple. You are supposed to be looking out for buying opportunities. When the market is bullish, don't be looking out to sell. So the first thing you should look out for when you open your chart as a trader is ask yourself, is this market bullish or bearish? That is the market buying or selling? And it's not just by one candle. Let me show you a chart here. Not just by, okay, the current candle now is showing green, then so this market is bullish. No. Ask yourself the main structure of the market. What are you seeing in the main structure of that market? Is that market going up or is going down? That's the first thing you should ask yourself. Look at this situation here now. Let me draw this thing down. From this point down here, up to this place up here, you can see that the market is actually bullish in some sense. Why? Because it is going up. We have more buyers. The market, no matter what the red candles are showing, the green ones are more. Why? Because the market is actually going up. It's buying up to this point like that. If you maybe check other charts, you might even see more examples like that. So I think this will bring us maybe like the first assignment for this class this night. What you do is that after the class this evening, just go to the charts, any chart of your choice, and then draw, just mark out a bullish structure and also a bearish structure. So that will be the first assignment for this class this night. So the second way the market moves, or the direction the market moves, is a bearish market. Bearish simply means the market is selling. There's a decrease in price. So you see something like this. So this is a bearish market scenario. Now, what do you expect to see in a bearish market? The market is selling down. You're seeing highs and lows being taken out. So you know that, okay, this market is selling. That means what? There are more sellers in the market. And if there are more sellers in the market, you as a trader, why would you be looking out to buy? You should be looking out to sell. Once there are more sellers, you should be looking out to sell. If there are more buyers, you should look out to buy. So this is a bearish market. Bearish market. So this is the first one, a bullish market, and then the second one is what? A bearish market. Bearish market, like I said, sellers are the ones in charge of this market, and then um, we have less buyers. So you as a trader, what you need to do in a bearish market is to look out for when can you sell, the best time for you to sell. What is the best time for you to sell? So that's what you should be looking out for. So these are the two major ways the forex market moves. The market is always either bullish, or it is always or it might be bearish at that point. Now another So I think I was explaining this bullish scenario or bearish rather. So I said when the market pushes like this, there's always a correction that will take place. And you in a bearish scenario, what you are looking out for is to sell. So you sell after the correction has occurred. Now, let me go back to the bullish market now. Now, for a bullish market, it is we already know the market is trending upwards, it's an uptrend. So what do you do? What do we expect to see? We expect to see, okay, these particular points, these high points, they are called higher highs. This is a high. That's the highest point the market reached before the correction occurred, before this correction took place. Then this is another high. That's the high price the market reached before the market now before the correction took place. The same thing here again. These are another high points before the market did a correction. Then these are another high points before correction occurred. So this all these places they are called highs. So in a bullish market, what do you expect to see? For bullish markets, we want to see higher highs and higher lows. Okay, somebody say you can't see my screen. Okay. So I said for a bullish market, we want to see higher highs and higher lows. Now, the high, imagine this price started from this point, got to a particular high price, but the price was too high, and then there were no sellers enough in the market. So the market did a correction. That's to reduce price, and then more people will come in to buy when the price is cheaper. So in that process, the price begins to increase again, and then it breaks the previous high price and creates a new high price now. So for a bullish scenario, what we want to see is new high prices being created. That's what we want to see. And then when these new high prices are created, remember the market will have to correct itself. So from this place, when the price is high at this point, there will be a correction that will occur. And in that correction, is going to create a new low. That's a new low price. Remember, this price here will be a bit higher than the previous. This was the first low. This is where the market started from. This was the first low price. Then price began to buy up to this point, creating a new high price. Then correction now happened. In that correction, the correction creates a new low price. So this new low price now is cheap. Okay. So this high price that was created here, it's the market corrects itself, creating, and this high price here creates this new low point here in the market, this new low price. Now, at this, when the price is low, more buyers begin to come into the market, and in that case, it begins to push the price high again. It begins to push the price high to create a new high price. Now, this new high price is higher than the previous high, that's higher than the previous high price. And then the same thing will occur again. The price is now too high. So what will happen? The market will correct to a cheaper price. And in that at that point, this is called a higher low. So this is called a higher low. It's a higher low. That's this low price is actually higher than the previous low price that the market reached to. So the same thing occurred here. This more buyers will come in here, push the market to a higher high, and then this creates a higher low. So what do we have? What do we see? In a bullish market, we want to see what? Higher high. So in a bullish market, what do we want to see? We want to see higher highs being created. This is a higher high. Then I want to see another higher high here. So we have a higher high like that that is being formed. That's basically a bullish market. And then what do you want to see? Higher low. So higher low. Let's see. Higher low. I'm doing this. I have to take my time to do it because I want everybody to actually catch up and follow. Because I really want you guys to start taking trades by yourself. Like you analyze charts, take trades, and if possible, fund your account self and start taking these trades. Because it doesn't make sense. You are learning forex or you're learning how to trade and you're not actually trading. You're not making money from it. So I really want you guys to master this thing very well. That's why I say I'm taking my time to start from afresh, label all these things so that you can start afresh. Like if you can learn these things very well and then fund your account, you sef you'll be happy with it. Imagine you fund account and your money, you're making, let's say, at least $50 from your trade. Maybe it's $100 extra in a month. That's like 150K extra. So just try your best to master this thing very well so you can start trading with it. So basically, this is what we see in a bullish market. What do we see? Higher highs being formed, higher lows. Now, another important thing about a bullish market is this: when this market is occurring, let me save this. I can send it to the group. So, for a bullish market, one other important thing you would like to see in a bullish market is these highs are being broken. Let me see. So for a bullish market, we want to see these higher highs. Then we have another high being broken. So for a bullish scenario, what do you want to see? We want to see these highs being broken. Okay, so as I was saying, for a bullish market, what do you want to see? You want to see higher highs. You want to see the market creating higher highs like this. And then these higher highs, they are being broken. Each high is being broken by the next push move that occurs by the buyer. So when this market creates this high, there's a correction that takes place. The price is reduced to a cheaper price. Then more buyers come in and push the price higher than the previous high. In doing so, they break this high that was here. So what do you expect to see in a bullish market? You want to see prices breaking previous highs. That's the new movement should break a last high, a previous high that was created. So let me see. Let me write something out. So want to see the structure being broken. We call it break of structure. So want to see break of structure. Yeah, break of structure. So BOS simply means break or structure. So the structure that the buyers are creating, want to see that these higher highs are being broken to the upside. And then most importantly, in a bullish market, the higher lows should be maintained. That's these higher lows should not be broken. This is what you want to see. You want to be looking out for. These higher lows should not be broken. This point in the market, the higher lows should not be broken. That's for a bullish market now. So the moment any of this low gets broken, you begin to expect that okay, this market is changing structure. That's the structure of the market is changing from probably bullish to a bearish market or a consolidating market. So but basically this is what we want to be seeing in a bullish market. Higher highs being broken and then the higher lows are maintaining. Nothing should break the higher lows. They should just remain like this. This is what we expect to see. So I think we can go to the charts now and then we look at examples. Maybe tomorrow's class will now talk about bearish markets. But for today now, at least I'm sure that I've spoken a lot about bullish markets. So you should not have too much questions on bullish market again. So let me go to the charts. Let me go to bullish market. Let's check 15 minutes. Okay, good, 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 good. Let me remove this lines. So this is a very good example of a bullish market. Why? Because if I just draw something here, basically I can see the prices are going up, prices increasing. That's like the general market movement. The market is going bullish, the prices are increasing. So I want to consider for anything from this point. Let me see. So anything from here, this blue line I just drew here, let me make it thicker. So anything from this point down to this place, this is a bullish market. Why I don't want to include here is because this is actually a change in market structure that occurred at this point. This market is more likely to sell now compared to buying. You get to understand why. Maybe after we discuss bearish market. But for today, I'll use this example from here to here to explain a bullish market. Now, what did I tell you about a bullish market? We say in a bullish market, we want to see higher highs being created, something like this. So this is what we want to see in a bullish market: prices creating breaking highs and then creating new higher lows. Please just try your best to follow up this thing carefully. Just try to understand what I'm trying to say because it's actually a very simple concept. It's just for you to pay close attention, you'll understand it. So now the market starts from this point. This is a low point.